Hello everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now firstly, we're going to take a look at the economic calendar because there's been a lot of economic data released today. I've narrowed it down to some of the more important releases that we've had, and to be honest, despite the fact that we've had plenty of data, there hasn't been a huge amount of surprises. We had GDP from Australia overnight, that was 0.5%, falling slightly short of expectations. We had manufacturing and industrial production figures from the UK. These figures have really hit the pound early on in the session. We are continuing to see that decline later on this afternoon during Mark Carney and other members of the Bank of England's MPC's inflation report hearing. You can see that industrial production easily beat expectations, while manufacturing production on a yearly basis actually fell well short of expectations at 0.8%. It's worth noting that the reason industrial production exceeded was because of a big boost in the volatile mining and quarrying sector, whereas the manufacturing sector, which makes up around 70% of industrial production, is the one that was hardest hit. So this is where the biggest concern is. Now it's worth noting that these figures are for July. The manufacturing PMIs for August have bounced back, so maybe there is a case of the shock from Brexit having a negative impact on these figures, and maybe we'll see a rebound next month, and somewhere in the middle will lie the truth of how the industry is actually performing at the moment. But I think that has really hit the pound early on in the session, and it looks like those losses really are just largely responsible for the pound being down by around 2/3% currently, although like I said, they have been extended in the latter part of Carney's hearing. We had JOLTS job openings, which rose to 5.87%, 5.871 million, so a big move to the upside here. We did hear from John Williams, Fed member John Williams, overnight, who really stuck in line with what he'd been saying previously. The first point being that the Fed's target of 2% inflation is still, in his mind, maybe needs to be readdressed, looking at things like nominal GDP targeting as opposed to inflation targeting. And if we're looking at inflation targeting, maybe they need to be looking at higher levels of inflation at a period of lower growth. Doesn't really offer too much insight, I guess, into the Fed's thinking at this stage. We need to hear more policymakers' views, but he did say that he still believes that we are effectively at the point where we need more rate hikes, or they were best seeing them sooner rather than later, I think was his actual quote. We had the NIESR GDP estimate for the 3 months to August from the UK at 0.3%, giving us some insight into what we can expect going forward, being lower levels of growth. Bank of Canada didn't surprise, even interest rates at 0.5%. This is something that Alfonso covers in his piece in the last 24 hours, talking about the Bank of Canada rate statement, the fact that we'd had 2 rate cuts in 2015, and that they want to see how these really impact the economy going forward, rather than what kind of an impact the current policy has before doing anything too rash, and that the Bank of Canada is expected to keep interest rates on hold for the rest of the year, and that's exactly what they've done today. Still to come today, we've got API weekly crude oil stocks, and we've also got some GDP data and other data to come from Japan. But like I said, the key event today was always going to be the Bank of England's inflation report hearing in front of the Treasury Select Committee. The reason why this was the biggest event today was, one, because we want to know what the Bank of England's planning to do next and whether they're planning to unleash any further monetary stimulus. They did mention at the meeting previously that that should the economy perform in line with expectations, then more stimulus would be needed before the end of the year. The economy has bounced back, though, with a lot of economic indicators, particularly the PMI readings, suggesting that the boost in exports from the weaker exchange rate, combined with a consumer which is continuing to spend strongly, is supporting the economy. Now, this doesn't take into consideration a number of other things that contribute to GDP, things like business investment and things like that. These aren't really factoring in. And if you take a look at a number of other indicators from, say, hiring firms, they're saying that what we're effectively seeing right now is a drop in companies looking to hire permanent staff, are rising contractors, and smaller requests for new staff as well, things like this, which would only be seen later on in the harder data, which will be released in the months ahead. So there's mixed data really coming from the UK, and I guess what we wanted to hear from this hearing is whether the Bank of England still intends to act. As of yet, it looks as though we haven't heard anything in relation to that at this stage. It's been a lot of political back and forthmanship, to be honest. We started with Mr. Rees-Mogg grilling Carney about, as was expected, being a Brexiteer, grilling Carney about his pre-Brexit warnings, whether he still thinks they were suitable, whether it was in the correct position to take as the Bank of England governor, whether he was being correct on his decision making, whether the policy response has been correct, and so on and so forth. Like I say, typical brinksmanship from a political, from politicians speaking with central bankers. It tends to be the way, but the fact that this lands on Brexit and you've got pro-Brexit and pro-EU people on this committee, it was always going to focus around this, and some trying to effectively humiliate Carney and others supporting his position. Carney, to this point, appears to have stood fairly strong in his assessment of things, and the Bank of England's response to the surprise decision is what can help the economy remain resilient, and so on and so forth. So like I said, there was no real major surprises to come from this. They have discussed things like helicopter money, saying that you can't entirely rule it out, although it's not something that they are considering right now. We did see the pound take another move lower around the talk of the helicopter money. Mark Carney also talked up the stronger issuance of corporate bonds since the policy measures that they've announced. All in all, though, since the start of the press conference, since the start of the hearing to now, there's only been a small decline in the pound. The bulk of the moves in the pound, I think, today have been driven by the manufacturing production data earlier on. So while this is a big event and we have learned a few different things from the hearing, it's not really necessarily given us the kind of information which we wanted to see. What we've effectively seen is the political side of this event going up against Mark Carney and the other policymakers, just defending their independent views prior Brexit and their independent assessment and response post Brexit. The next key event now, of course, is going to be the ECB tomorrow, which is a massive event all in itself. While we're not expecting any policy change per se, we may see them extend the end of QE to beyond the March 2017, which is in 6 months' time. So that would technically be a policy response, but nothing that would be wholly unexpected. And aside from that, we're just looking for the economic and inflation forecast to see what the ECB may be intending to do in the months ahead. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.